Property landlords, tax planning and structure are the two most important aspects that must be considered if you want to run a profitable and successful property business. Too many times, we've seen it too many times, whereby these two items, tax planning and structuring, are neglected, and therefore this means unnecessary tax liabilities, unexpected tax liabilities, and overall stress and headache. Now, what do we mean by tax planning or tax optimization? For example, you might be owning properties in your personal name or jointly with your spouse. Income tax rates are 20%, 40%, 45%. Corporation tax rates, so properties held within a company, suffer tax but at 19% and maximum 25%. So you have to ask yourself these questions, and this is what we'll discuss with you. This is why you have to speak to the experts. Is there potential scope to incorporate the property portfolio into a limited company and therefore immediate benefits of reduced income tax? There are other benefits. For example, there's no restriction on claiming mortgage interest. You crystallize or you eliminate capital gains on transfer into the company. Inheritance tax planning is easier when dealing with shares rather than bits of property. So these are all angles that need to be explored and considered. When we're looking at capital gains tax, yes, the annual exemption has decreased from £12,000 down to £3,000, but there are other reliefs available. Stamp duty land tax, 43 reliefs as per legislation. Most probably know about one or two. And inheritance tax, as I say, easier to plan with shares. I'm talking specifically about growth and freezer shares, family investment companies you might have heard of. This is all connected. Tax planning and structuring is all connected. But the bottom line is, the main thing here is that you need to be proactive and ensure that these two aspects are well looked after. You might need to make an investment at the start. You might need to spend some time at the start. But the bottom line is you've made an effort, and therefore in the long term, in the immediate term, to be fair, but then also in the long term, generational wealth stays within the family. What else are you doing all this for, right? What else are you doing it for? We're a firm of chartered tax advisors. We specialize in property tax. Myself, I have experience in the property space. I know it's not easy. Sometimes people say passive income, investment income, but I know it's hands-on. If you have 5 properties, 6 properties, 3 properties, 20, 30, 50 properties, please reach out. Let's have a chat. Let's have a free 30-minute chat. General catch-up. We'll, map out what you can think of, what needs to be explored in detail, what are the risks and the different strategies, structures and solutions that we have available. Discretionary trusts, family investment companies, offshore trusts, pensions. There's so many different things we can look at. Holding companies. It's for you now to reach out to us. I hope to speak to you soon. Have a great day. Bye.